Today, my guest is Tyson Cross. Tyson is a multifamily real estate broker in Portland, Oregon. He's also a real estate investor, and we're going to speak with him today about the benefits of real estate investing. But first, a quick reminder, if you like the show, please let us know. We'd love to hear from you. You can like, share, and subscribe, and leave a comment. Like I said, we'd love to hear from our listeners. Also, if you'd like to see how handsome our guests are, you can check out our YouTube channel. It's Commercial Real Estate Pro Network. And with that, I'd like to welcome my guest, Tyson. Tyson, welcome to Commercial Real Estate CREPN Radio. Got too many things I'm trying to think of there. So,
Darren, well, thanks for having me. Really excited to be on your show.
Well, I'm looking forward to it. We've talked here a little bit recently, and enjoyed your insight and kind of your viewpoint. Before we jump into our conversation, if you could take a second and share with the listeners a little bit about your background.
Yeah, happy to. So I won't spend too much time on it, but the past, in 2012, I entered commercial real estate. Prior to that, I was a teacher, focused on special education, teaching kids with autism. I realized I wanted to change that and got into commercial real estate. And I started out as a commercial property manager focused on medical office buildings and retail. From there, moved into brokerage and specifically focusing on multifamily brokerage. And that's what I've been doing since. Now, definitely getting more into the investment side of things.
Got it. And you mentioned you wanted to change things up. I'm kind of curious. I always like to know a little bit, or kind of get a feel for what was it that appealed to you about real estate to get in.
Yeah, I think like most people who have gone into real estate investing, there were a few books that I read a few years ago, and well, more than a few years ago, but early on that really inspired me to investigate real estate as a possible way of not only making a career out of it, but building wealth and retiring or building that retirement with. And one of the books that was really instrumental for me in that regard was The ABCs of Real Estate Investing from Ken McElroy. I remember reading that, and the way that he writes, it's so easy to understand, but basically, he takes you through this journey where he started as a property manager all the way to where he is now in syndicating and raising capital and buying large apartment buildings. And so after reading that, it really inspired me to kind of explore that. But it really wasn't until I was asked to start a business with a friend while I was teaching that got me interested in business itself. And so as we did that, I learned a lot about business. I learned a lot about partnerships, just things that I'd never learned before that. And at that point, taking real estate and learning about business and combining the two really kind of led me down this road to say, hey, commercial real estate is where I should be going. And, it took a while. I mean, it wasn't a quick process. I remember when I decided to do or to go that route, it took me probably 8 months or so. And I spent a lot of time just reaching out to people, putting myself out there, educating myself, coming from a place where I had no business background. It was not easy to break in. At the time I was thinking of going the brokerage route, and specifically apartments, because I really liked what Ken McElroy laid out in his book and ultimately syndication. But with, a young child just recently born, and it wasn't the right time for me. But that's kind of how my path has gone. And now I'm in a place where I'm coming back to the syndication with a ton of experience under my belt, doing deals. And we're at a point now where we're starting to raise money. And we're not buying apartment buildings, but we're buying mobile home parks. So that's kind of the path I've taken. So.
Got it. And for listeners, just kind of as a reference point, can you speak a little bit about what the appeal is that you've found with the mobile home parks?
Yeah, I mean, there's a ton of appeal, and I could go on and on for days about mobile home parks. I love talking about them, but I think it's hard to pinpoint what drew me in initially to them. I think everyone, when they first hear about them, if you don't really know much about them, you think negatively, and that's largely due to society and what the stigma that's been placed on them. But I'll tell you, in going, having sold tens of multiple tens of deals, apartment deals, I can tell you there's many mobile home parks that are nicer than a lot of apartment deals. So I don't think the stigma is fair, but I think mobile home parks is. I think the big thing that I like about it is the fact that we have such a demand for affordable housing, and as you look into the future, I think that's going to continue to grow. We've got housing crisis all over the country and housing shortages, and there's just the income disparity is getting larger. So I think that's the number one thing. I think affordable housing is such a need, and I think safe, clean, affordable housing is really important. And so for us, having the opportunity to go in and improve housing, specifically affordable housing, and then being able to make a profit from it is just a win-win for everyone involved. There's other aspects that I love about it, but those are really the two. I think I've realized in doing my first couple deals that initially it was about the investment, right? Making money. And that's why everybody goes into this, creating financial freedom. And that's important to me. But I think what I've learned in the short time that I've owned um, uh, mobile home parks is that it's more fulfilling to hear people happy with us making a better place to live and just improving the living conditions. And, we've had tenants come up and say, we were thinking about moving out, but since you guys have taken over the park, we really love what you've done and we're going to stay. So that's really fulfilling to me.
I just thought about it, and you'd be a good person to ask, having the experience on both selling multifamily and also owning mobile home parks.
Mm-hmm.
Um, do you can you express in words, I guess, the connection or the ownership component of a mobile home park? Um, I guess a resident as opposed to an apartment owner. Is there something tangible there? Is it quantifiable? I mean, somebody that actually owns their home. I mean, they're renting space in the park.
Mm-hmm.
Is there that ownership mentality that transfers? Does it? I mean, do you find that
Yeah,
is it quantifiable
yeah,
or?
yeah. You bring up a good point, Darren. I'm glad you actually brought that up. There is a big difference when you compare residents of our mobile home park to a resident of an apartment community, and you nailed it. It's the ownership factor. What we look for in a lot of these parks is residents who own their own home, and that's what makes mobile home parks so unique. The fact that you're owning a piece of property and leasing space to someone who owns their home on the property. So what that does, and you alluded to it, is it creates a sense of ownership or pride of ownership. And so there's some things that are byproducts of that. For instance, typically in a mobile home park, the length of a resident staying in a park is about 7 years, give or take. In an apartment building, it's about, I think it's right around 2 years, if I'm not mistaken. So right off the bat, you tend to have lower vacancy. That is because people own their homes. It's hard to move a home. It's expensive. But not only that, people create their homes, their permanent residence there. And so, yeah, I think there's a difference. You have people in a mobile home park that create a community. I was just at the mobile home park conference in Oregon, and one of the seminars we focus a lot about customers and how we treat them, and part of that is creating that community within your park. And we even talked about moving away from the fact that we call them mobile home parks. What we should be calling them mobile home communities. And really, in essence, not even mobile. They should be referred to in the future as home communities. And I think you're going to start seeing that, and hopefully that will remove the stigma, because eventually I think really these are great places to live, and I think it's for that reason you have these people creating a sense of community and having that pride of ownership with the homes that people own in the park. So.
Yeah, no, and I think that even however you want to look at some of society's issues, with But I think that whether it be work or ownership, there's a sense of pride. I mean, if you do a good job, or if you own the roof over your head, or you feel like you have some control over it, I would think that it somehow translates and could be an uplifting kind of thing. I mean, and again, it's like you mentioned in the beginning, it's affordable housing, but it's still it an essence of ownership in there that I would think could
Absolutely.
be transfers and stuff.
Yeah, and
Um,
another just kind of if you
yeah,
don't mind, I'm
go
going
ahead.
to expand on that a little bit. Some of the things we're doing in the park would be to create a bigger sense of community, right? We want people to stay. We want people to really enjoy where they live and create it and have that be their own. And so some of the things that we're looking to doing is how can we innovate the um, the management and the ownership of these parks, right? And so taking away some of the just traditional, hey, we collect rent, we expect you to abide by these rules. We want to remove that and create more of a community or relationship between the residents and the owner. And so, we're giving some power back to the residents in that we're letting them set the rules. We want to have a rules committee. We're doing some fun things in the park to inspire people to not only take care of their house and their yard, but we're looking at providing incentives for the cleanest yard or decorations. We're doing a summer park get together where we'll provide the food and the residents can have a barbecue, and so just different things that we want to do to inspire people to be happy and take pride of ownership where they live. So.
Well, it's funny. I forget, and I haven't studied a lot of management type coursework, but I think there's a lot of those nuances kind of translate between, whether it be managing residents or employees or whatever those
Mm-hmm.
relationships are, but give some sort of a sense of buy-in. That it's
Yeah.
a win-win kind of thing, as opposed to a hey, rent's due on the first, you're late. Kind
Right.
of adversarial relationship there. So that's
Sure.
great.
Sure.
Okay, so we've talked a little bit about mobile home parks and kind of the incentive, the reason why you've gotten into it, and one of the a few things that you're seeing, and kind of the distinguishable difference between that and say a multifamily. Wanted to talk a little bit because I think this is where you and I were talking the other day, and it resonated with me, and especially I think given multiple things that are going on right now. I mean, as we record this today, it's October of 2018. The stock market's had some rough couple of days,
Yeah.
um, which I don't know that that's out of the ordinary. Summer's over. There's profit takers. There's always cycles and stuff, but as we sit where we are, interest rates are hedging up. Stock market's having some, foreseeable challenges, possibly based on some industry reports, just based on they may not hit their targets, and I think kind of where you and I were talking, and I wanted to expand on, was more about how you see real estate as a piece to a retirement portfolio, as opposed to just a traditional 401k, or somebody that has little or no control other than to say sell or buy a particular stock. Is that
Yeah.
Does that sound like something we can?
Yeah, yeah. I think I'm obviously big proponent of real estate, and one reason why I'm so big on it is because it's easy to understand, right? I mean, everybody needs real estate. It's such an important thing in our lives, and I think when you talk about investment real estate, one of the great things about it, specifically multifamily or housing, is the fact that everyone's going to need a place to live. So I don't think there's any debate on housing being such an important, necessary investment. And so one reason I like it so much is because, yeah, I mean, you alluded to it, investing in a 401k. I think it's difficult to invest in things that you don't understand, and we've always been taught to, maximize your 401k. Have someone give you a nice mix of mutual funds and stocks and bonds, and if you're young, go aggressive in stocks. If you're older, maybe go a little bit more heavy in the bonds and less in stocks. But I think ultimately, at the end of the day, people should invest in what they know. And I think it's very easy to understand the benefits of investing in real estate. So, I think we were talking about this specifically, the fact that you could take one mobile home park, for example, and you could buy one mobile home park, and that could essentially fund your retirement. And the beauty of it is that not only could you create a steady stream of cash flow from that, but you're also having the principal pay down from your residence, right? So if I took the simple case of $1 million mobile home park, and I applied a down payment to that, and let's just say for sake of this conversation, we're going to say a 30% down payment. So someone would need to save, $300,000 roughly to buy that park. But over the course of time, if you're saving money, and you can do it in a way where that money is growing while you're saving it. So you could grow it in a 401k or an IRA, which you could then self-direct. But that's a different conversation. Let's say you save the 300,000, you put that down. Now you have one investment that's worth $1 million. That investment is going to grow over time, assuming that you continue to maintain it, operate it, raise rents annually, and essentially pay you an annual cash flow. Secondly, your residents will be paying down that note held by the bank or whoever lends you the money. So that in, let's say, 10, 15 years time, not only is your cash flow theoretically going to increase, but you're also going to have a ton of principal or equity in the property from all the money that's been paid down on that loan by your residents. So, when we talk about just preparing for retirement, I think I'm so big on real estate for those reasons.
No, I think that's exactly where we were at, and I was kind of nodding my head the whole time. I think we both are kind of proponents of it. I think one of the things, and especially now, if I was looking at retirement and the stock market's hiccuping or whatever, I don't think it produces a lot of sense of security. I think that there's a more of a tenuous, or can I really afford to do this right now? Do I need to, maybe I need to stay another year? You might be rethinking that, as opposed to if you have a piece of real estate that you've had for a number of years, and is there somebody trying to get in your okay?
Somebody was knocking on the wall.
Okay, all right. The if you have something and the principal's been paid down to where you owe little or no, if you were fortunate enough to get it paid off, so you don't have that big debt hanging over you, but you've got this steady income. You've been maintaining it, and it's producing income, and then you have the income would presumably keep pace with inflation. Right.
Exactly.
That right there, you've hedged inflation. To me, it just, and then also, I guess as a child of an aging parent, I've seen more, firsthand what it looks like when you're trying to live off of your retirement, and how you do that. Essentially, in order to do that, a lot of times you have to harvest some of your stocks. So, and you do that through, you sell those, and then you no longer have those to, for the growth. So it's, to me, that was an eye opener, that I hadn't necessarily realized or I guess, enunciated, in a way that in a comparison to a real estate thing that's continuing to appreciate, it's throwing off cash, and has this equity, feature in it as well.
Yeah, there's also the depreciation aspect. So, right, the fact that you can depreciate this asset and shelter your tax. We're talking about income that you may not even have to pay tax on initially, and that's another big reason I like mobile home parks, is because there's accelerated tax depreciation, and so you can actually depreciate over at about 15 to 16 years, whereas apartments you're 27. So there's a nice difference there. But the other part of it is too. There's a guy that I follow, his name's Mike Johnson. He's a big proponent of talking about how mobile home parks specifically can basically fund your retirement. And if you'll see him post articles all over LinkedIn, and he talks a lot, and he writes a lot about, the power of real estate and how it essentially can remove your day job. He always talks about, I'm 95% retired, and he oversees his management, but he owns 3 mobile home parks. And, his first park he bought, this was back in, I think, 2003, but he essentially bought it, and got the bank. So he got a bank loan, and then he ended up having the seller carry back the down payment. And so when he closed, he talks about how the bank actually gave him $10,000 because they prorated the rents. And so he got that month's rents payments essentially. So he says he got paid $10,000 to buy this mobile home park. And so when I talk about, the fact that you could have one piece of property fund your retirement, I don't even necessarily mean that you have to save up 30% down. I'm just using that as your baseline example. I mean, there's so many different ways out there where you can make that happen. And last thing I'll say, but mobile home parks are still a very fragmented asset class. There are still a lot of older owners who own these things for years and years who don't have any debt. And that's a great way for them to retire, right? So they get to a point where they're just tired of the day-to-day. They still know the asset, it's free and clear, but they're just ready to remove themselves from the management. Well, there's many creative ways that you can finance those parks with these types of owners. And so that's another way that that's another benefit. But
Yeah,
conversely, for someone like us, when we're ready to retire, maybe that's a solution too,
sure.
So,
No, and even I think sometimes it's not always talked about is that owner financing. I mean, there is a win. I think so often it's viewed as the buyers getting one over on the seller, which I mean, because you're coming with no money, or you're. But the reality is, it can be a big win for the seller in that they continue to get that income stream,
yep.
for one, and then maybe they don't take as big a hit on their gain. Because they're able to spread that gain out over a number of years. So it's not I mean, it truly is or can be a win-win for both the buyer and the seller, to overcome that. Wanted to ask you one thing, because I think sometimes, and I know I certainly can, kind of look at the glass, if you will, maybe half empty from a standpoint of, we're at the top of the market, God, deals are hard to find kind of right now. Can you speak any to that as far as just kind of a, because I think that clearly we've been in kind of a once in a lifetime era here for the last 10 years.
Sure.
Just in the remarkable returns, but that's because we were so low. We got hit so hard.
Yeah.
Values dropped so low. So I wonder if you can speak a little bit about just kind of the mindset and to calibrate for the listeners so that they don't think, the party's over, missed that opportunity. Because the cycles continue. I mean, there will continue to be cycles, but just if you could put into perspective a little bit about ongoing expectations and what your kind of a viewpoint is.
Yeah. First off, I would say I wasn't in real estate when the recession hit. So I was fortunate, or I guess you could also say I haven't lived through that cycle or that pain yet. So I don't know what that's like, but I do know from sitting on the sidelines or seeing that from afar, it was pretty painful. But like you said, I mean, real estate's cyclical. I think everybody's out there saying it's really hard to find good deals right now, and that's true. I think that we're in the longest recovery we've ever had. Multifamily specifically has just been so popular these last few years. Everybody's trying to get it, and specifically like our market, Portland's been just on fire. It's cooled some in the last 6 to 8 months, and that's primarily because of interest rates coming up. And the expectation from seller and buyers, that gap was growing. But I think that there's never a bad time to buy. I tell people that all the time. I would, there's always deals out there, and the market will continue to evolve. You have to really just make sure when you're buying or when you're investing in property that you follow a few guidelines. I mean, I think, Joe Fairless talks about this, but there's three rules to investing that's going to basically cover you. And number one, buy something you always want to buy an asset that's cash flowing, right? So never buy on a speculative investment and hope that it's going to appreciate or that the cash flow is going to come. You need to buy when you close day one that asset's cash flowing. So you do that, but also you want to go in and try to put long-term debt on these properties. Right now, interest rates are rising, and we're seeing that probably to be the case into next year. In 5 years' time, who knows what the interest rates are going to be like? So if you can place long-term debt, that gives you time to stabilize the asset, get some decent principal pay down. Hopefully over those, 7 to 10 years, if you can get it, you're going to be able to raise rents and kind of keep improving that asset so that when you go to refinance, your leverage is much greater. In other words, you have a bigger spread, or that equity is a lot greater than when you bought it. So as long as you do that, the third rule would be just having enough cash reserves. So, some people buy these properties, and I've seen it in the last few years, people buying, 5 caps, multifamily deals, and they're leveraging it to the whole. So they're taking out, a few years ago, you could take out 75% loan to value, right? And we haven't seen that hardly at all, but people would come in with very little cash. And so as long as you're buying an asset that's cash flowing, you can place long-term debt, you come in with plenty of cash reserves, and you're not over leveraging. I think that's probably the fourth one, but I think leverage is great, but I think too much leverage could be a hindrance, especially in a time right now where interest rates, as they rise, your values drop. So if you go into a property with low leverage, meaning you're going to have a huge loan and you're not putting that much down, and you're already at a 5.5 cap or a 6 cap, if the interest rates rise up, 100 basis points, that's going to drop the value because your cap rates go up with interest rates. So that's what I would say. I think people just need to be aware of that, but there's never a bad time to buy. Real estate's going to continue to be a great asset into the future. And again, we're focused on housing, right? So, there's a whole different view for me on retail and office and industrial, but specifically housing will continue to be a great asset and for years to come.
Sure. No, and I think the fundamentals, every asset class has its own persnickety details, but I think that by and large, what I've come to understand is that they're fairly similar. If you have demand, whether it be for housing or office space or industrial or whatever it is, I mean that's what drives pricing and rents and all that stuff. So I mean that's I think if you go back to just kind of the hierarchy of needs, housing is always kind of a primary thing there. So that's kind of one of the easier ones to follow. But no, that's great. Well, I'm just trying to look at our time and be respectful of that. But I think that just from a standpoint of kind of covering the mobile home parks and just the real estate as an asset class for your retirement, if there was one thing, one message you'd like for the listeners to walk away from this conversation, what would that be?
Yeah, good question. I was reading a thread in a real estate investor group on Facebook the other day, and people were debating the efficacy of real estate courses. So are they good? Should you buy a course? Some people say the courses are, not worth it. People were debating that. And I made the comment that the courses are not the problem. The courses provide knowledge. And just like anything else, you have to take action. And so many people go into real estate with the hopes of making the big bucks, right? Because everyone goes into it saying, I want financial freedom. I want to make a lot of money. And sure, that's great. There's more millionaires made in real estate than any other industry. So that is possible. But I think so many people go in and they say, if I can just buy this course, I'm gonna do it. I'm gonna make it. I
Right.
think the big thing to think about is it's not the course, it's taking action. And the course is just an aid. Um, I made the comment too, if I ever make a course in real estate or whatever, I would focus a lot of time in the psychology of real estate investing. I don't think anybody really talks about that. And there's something to be said about that because when you're starting out, you need to spend a lot of time on the psychology of it and figure out, okay, why am I doing this? What are the things I need to overcome personally in order to get this done? How is this my ability to do deals? There's a lot of people that will sit on the sidelines for years because they just want to educate themselves. They will just want to read. They just want to buy courses. The reality is you need to focus on the psychology and your mindset. And I think if people spent more time on that, they'd be able to, they could probably be more successful, or more people can be successful. So I guess where I'm going with it is I think understanding yourself, knowing what, you know, what, let's see, knowing what about yourself can help you be successful. I think that's a really big thing. And then, from that, in the end, realizing that no matter where you are, where you struggle with, everybody has to start somewhere, and it's scary, right? But doing your first deal is so critical in getting that start. And so, I just think people need to focus more on kind of why they're doing things, how they're going to do it, instead of looking at the money and what they think is going to provide to them. So
No, I
hopefully
like it.
that was
No,
hopefully that was articulate.
I'll take mindset as kind of the key piece there. I think the
Yeah.
mindset is because I think you're right. There's plenty of courses, and certainly I've been guilty of it, and I think a lot of things are sold that way. It's the even kind of a lot of the multi-level marketing kind of thing is like,
Hmm.
God, if you just join, you make money in your sleep. Nobody, you don't
Right.
have to do anything. Uh,
So easy.
yeah, and I think that it's human nature to look for something. It's always the grass is always greener on the other side of the fence, or whatever you want to say.
Hmm.
But the reality is, in anything to be successful, you're going to have to put in some action steps, do the work
Yeah.
to make it happen. So that's great.
Yeah. And I
Uh,
mean, I think they're great. I mean, I've done courses. I think it's been instrumental in me developing as a real estate professional. And I think you just have to be careful, right, with the right ones. And I think having a mentor is big. I would encourage people to find mentors, even if you pay for them. Make sure you find the right one. But there's a lot of good people in this industry that are willing to help out and give back, and so that can be very, very, very good for you as developing, your career as a real estate investor.
I like it. Tyson, where can listeners go if they'd like to learn more or connect with you?
Yeah, so I have a blog I just started. It's TysonDCross.com, and that's Tyson D as in David. So you can go there. I've got a blog where we are posting articles, and you can find me on Facebook, TyCross81, or you can email me at TysonCrossRE@gmail.com.
Got it.
Yeah, please reach out. I'd love to hear from you.
I will list all that in the show notes, and I'm sure you'll be hearing from people. Tyson, I want to say thanks for taking the time to talk today. I've enjoyed it and learned a lot, and look forward to doing it again soon.
Sounds good. Thanks, Darren.
All right. For our listeners, if you like the show, please don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.